Welcome to the XRP Insider Network, the trusted source where serious investors, researchers, and crypto veterans gather to understand what's really happening beneath the surface of the digital asset world, especially when it comes to XRP, Ripple, and the rapidly accelerating transformation of global financial plumbing. And today we're diving headfirst into one of the most explosive, controversial, and surprisingly data-supported narratives circulating through the analyst community right now, which is the increasingly loud prediction that XRP is on the verge of a shock price surge that even seasoned market watchers admit they never saw coming. Not because of hype, not because of rumors, but because of an alignment of structural catalysts that analysts argue almost never appear simultaneously in any asset class. And the deeper we dig into on-chain flows, liquidity expansions, market maker behavior, institutional positioning, and the emerging geopolitical demand for specialized settlement tokens, the harder it becomes to pretend that XRP isn't sitting directly on top of a massive coiled spring of unrealized price energy, ready to release the moment macro and regulatory pressure finally shifts from headwinds to tailwinds. And what's even more surprising is that this time, the analysts making these bold calls aren't the usual Twitter personalities or moonboy influencers, but rather former banking executives, quant researchers, liquidity specialists, and fintech strategists who have begun publishing models indicating that XRP's current market structure is dramatically mispricing its real adoption curve, suggesting that the asset is trading at a fraction of what its settlement utility and cross-border payment throughput should mathematically imply. And if that sounds like an exaggeration, it's worth remembering that analysts made identical claims about Amazon, Tesla, and Bitcoin before they went parabolic, warning that the market was failing to account for exponential network effects, later proven true when each asset unleashed a furious revaluation cycle. And now a growing number of experts argue XRP may be in this exact same position as we enter 2025. When we analyze the hard data, we see a clear shift in liquidity corridor activity, especially in regions that previously had no interest in blockchain settlement rails, but are now adopting them out of necessity due to collapsing currency stability, sanctions, inflation, and the need for faster, cheaper, verifiable international payments. And what stands out most is that these corridors are selecting Ripple technology at a speed very few expected, creating organic transactional demand for XRP that is steadily rising even during periods of market stagnation, which analysts often interpret as a classic sign of suppressed pre-bull utility growth. Combine this with Ripple's ongoing expansion into institutional-grade custody, CBDC integration, and banking partnerships that were once only theoretical but now appear in official roadmaps, pilot programs, and regulatory filings, and suddenly the narrative shifts from XRP might someday be used by banks to XRP is already being threaded into financial infrastructure behind the scenes. And this is critical because price action almost always lags real utility build-up, creating an illusion of stagnation that rapidly evaporates once markets catch up to active usage metrics. Analysts also point to the unprecedented rate at which traditional finance is merging with digital assets, emphasizing that the real catalyst for a massive XRP revaluation may not come from retail speculation at all, but from institutional liquidity migration as banks and fintech operators seek to optimize settlement speed, cost, and compliance using tokenized systems. And because XRP is purpose-built for exactly this function, its value proposition is cleaner, more efficient, and more directly monetizable than generalized smart contract platforms that rely on hype cycles or meme-driven volatility. More importantly, XRP's circulating supply behavior has stabilized to the point that analysts can model its future liquidity requirements with greater confidence, especially now that Ripple's programmatic sales are paused and ODL-driven distribution has become far more transparent, allowing researchers to simulate potential price pathways if global settlement volume continues expanding at its current trajectory. Some models suggest that XRP's fair value under moderate institutional adoption falls between $5 and $12, while high utilization scenarios push projections past $20, not because of irrational speculation, but because settlement tokens require sufficient price to support deep liquidity pools across multiple corridors, meaning the token price must rise to meet demand rather than demand being forced to fit the price, a reality most casual investors overlook. And the closer we look, the more it becomes clear that analysts are becoming increasingly vocal about the idea that XRP may soon enter a revaluation window catalyzed by macroeconomic instability, rising institutional adoption, accelerated tokenization of real-world assets, and the growing acknowledgement that cross-border payment mechanisms remain painfully outdated, which puts XRP in a prime position to become a foundational interoperability layer across disparate financial ecosystems, especially as more institutions wake up to the cost savings of ODL-based settlement compared to legacy SWIFT processes. And once these cost-saving benefits begin to cascade through competitive pressure, adoption tends to accelerate exponentially, forcing lagging institutions to follow or risk losing global efficiency advantages. This is why the smartest analysts are arguing that what looks like slow growth is actually stealth compounding. And the moment regulatory clarity fully locks into place, which appears closer now than any time in crypto history, the market may reprice XRP dramatically and rapidly. As we zoom out even further, we realize that every macro trend seems to be converging toward a scenario where digital liquidity becomes essential rather than optional. Because global trade is expanding, cross-border capital flows are increasing, and financial institutions are under pressure to modernize quickly as digital native generations begin demanding instant, transparent, low-fee financial interactions, instead of settling for multi-day, multi-fee banking processes that feel like they were designed decades before the internet. And this generational transition alone is powerful enough to force an industry-wide shift. But when combined with geopolitical tensions, de-dollarization movements, and the rise of multipolar economic alliances, the demand for neutral, blockchain-based settlement layers becomes nearly unavoidable. And among the handful of tokens suited for this role, XRP remains uniquely positioned due to its scalability, transaction throughput, regulatory footprint, and long-term resilience in the face of market cycles, lawsuits, misinformation campaigns, and macroeconomic volatility. Analysts also highlight something that rarely gets discussed publicly: the psychological pressure building within the institutional investment community as more firms begin to acknowledge that they ignored digital assets for far too long and now risk falling behind competitors who are rapidly integrating digital settlement rails, creating a kind of FOMO at the institutional level that dwarfs anything seen in retail crypto cycles. And XRP, with its proven history, deep liquidity, and corporate backbone through Ripple, becomes a logical entry point for risk-managed institutional portfolios seeking exposure to real-world utility rather than speculative narratives. And this is one major reason analysts believe a sudden liquidity shock upward is now more probable than ever. The models that predict an upcoming surge are not based on hopes or guesses, but on measurable structural factors such as corridor demand, NVT ratios, liquidity depth, and an observable shift in how market makers allocate liquidity during sideways price action, a pattern that often precedes major breakout events. And when these models are layered on top of macro conditions, historical market cycles, and inflow patterns from past bull markets, the signals begin aligning in a way that is extremely difficult to dismiss, especially given XRP's historical tendency to remain flat for long stretches before exploding violently upward in short-time windows, a behavior that analysts believe could be preparing to repeat as the asset pushes toward key resistance zones with increasing pressure. And as we approach what may be the most crucial pivot in digital asset regulation, With global jurisdictions racing to define crypto frameworks that encourage innovation while clamping down on fraud, XRP stands to benefit disproportionately because regulatory clarity eliminates the single largest obstacle to institutional adoption: compliance uncertainty, freeing banks, fintech firms, and corporate treasuries to integrate XRP-powered settlement without fear of sudden legal reversals or penalties. And once this psychological barrier disappears, adoption accelerates at a speed that almost always surprises the market. Combine this with the growing realization that tokenized assets, ranging from equities to treasuries to commodities, will require fast, cheap settlement rails operating across multiple jurisdictions, and XRP's role as a neutral bridge asset becomes obvious to those who understand the underlying mechanics, prompting analysts to warn that the market is severely underestimating how quickly the tokenization ecosystem will scale once large institutions embrace it publicly, creating a feedback loop of adoption and liquidity expansion that forces XRP's price upward to sustain global throughput. And it is exactly at this intersection of macro forces, structural support, institutional readiness, and regulatory clarity that many analysts believe XRP is approaching a tipping point, a moment when years of suppressed price action may rapidly unwind. And now, as we move into the second half of this deep dive, we need to address what analysts say is the most misunderstood aspect of XRP's price potential: the difference between speculative value and infrastructural value, because most people still assume XRP's price can only rise through retail-driven hype cycles. But the emerging analyst viewpoint argues that XRP's most explosive growth phase will likely be driven not by retail markets, but by institutional liquidity requirements that force the asset to reprice in order to support settlement volume. This distinction is absolutely critical because while retail enthusiasm creates volatility, institutional liquidity creates stability, depth, and persistent upward demand that does not disappear during market corrections. And analysts argue that once XRP crosses the threshold where institutional corridors require higher liquidity to operate efficiently, the price must rise by necessity rather than speculation, echoing the way core commodities or foreign exchange rates self-adjust under demand pressure. And unlike purely speculative tokens, XRP's adoption curve is directly tied to the throughput of cross-border payments, meaning every incremental increase in transaction volume exerts upward pressure on price. What makes this particularly compelling is that on-chain metrics already show early signs of demand expansion occurring during periods of price stagnation, a strong indicator that utility growth is currently outpacing market recognition. And historically, whenever utility surpasses market valuation, a sharp revaluation follows as markets correct the mismatch, often rapidly. Analysts also note that XRP's historical suppression during the multi-year SEC case created an artificially low-price baseline that is only now beginning to normalize. And as global regulatory clarity expands, especially in Europe, the Middle East, and Asia, the asset becomes increasingly attractive to institutions seeking a compliant, scalable, and reliable settlement token that fits within emerging CBDC and digital asset frameworks, which positions XRP at the forefront of the coming financial digitization wave. When we layer on top the explosive growth in remittances, global payroll, B2B commerce, and digital treasury management, the need for fast, neutral settlement rails becomes undeniable, and XRP's design aligns directly with these requirements, giving analysts strong reason to believe that the market is on the edge of re-rating the asset dramatically higher. The projections that place XRP between $10 and $20 in high utilization cases are not based on wishful thinking, but on liquidity math that models the relationship between corridor volume and token velocity. And while no projection can ever guarantee a specific price target, the underlying logic is solid. If utility increases, price must accommodate liquidity demand. This is why analysts keep saying that XRP's future price potential is tied not to hype cycles, but to global financial infrastructure needs. And as those needs grow, so does the theoretical price floor. Combined with increasingly bullish sentiment from fintech analysts, former banking executives, and blockchain researchers, the narrative has shifted from if XRP rises to when liquidity finally forces a revaluation. And while timing remains uncertain, the alignment of macroeconomic forces suggests that the window for such a move is rapidly approaching. Investors paying attention to these trends understand that parabolic moves don't happen when hype is loud, but rather when fundamentals quietly align until the market can no longer ignore them. And that may be exactly where XRP stands today. The next major catalyst could be regulatory clarity, institutional rollout, major corridor expansion, or a global macro liquidity pivot. But whatever triggers the move, analysts agree that XRP's years of consolidation have created a stable foundation for an explosive upward correction. One that could catch the broader market by surprise, but would make perfect sense to anyone who has studied the data. And as the digital economy accelerates into its next evolutionary phase, XRP may become not just a speculative asset, but a critical settlement layer, powering the financial systems of the future, positioning early believers to benefit from one of the most dramatic revaluations the crypto sector has ever seen.